And now let's take a look at the bigger picture with Rebecca Walser, president at Walser Wealth Management. Thanks for joining us today, Rebecca.
Thanks, Tom.
All right, so markets bouncing today and this week, but still under pressure in bear market territory or near bear market territory. What's your outlook here for equities? As you know, you kind of see dead cat bounces and recessionary or inflationary pressured bounces during a bear market. Is this what we're seeing now, or are you a little bit more optimistic?
I wish I was more optimistic. I loved the period of time where it seemed like I could go on all the shows and just be positive. And now it's the exact opposite feeling. Unfortunately, Tom, I do think it's exactly that, potentially dead cat bounce. We don't have a lot of true fundamentals that are supporting, a trajectory that shows us positive results this year. So I still am of the mindset that we are going to, unfortunately, still have a lot more pain that comes, and that this is just a little temporary reprieve. It's a good thing for investors because we all do get weary of the sea of red, right? But I do think we need to brace ourselves. We're not out of the worst of it yet.
Yeah, I think this bounce this week has given traders and investors a little bit of opportunity to maybe reset what their expectations are here on this up week. But when you look at rates rising pretty sharply, inflation at 40-year highs, do you expect this to continue to dent risk assets both here and globally, because it's really putting pressure on not only the consumer but the economy as a whole?
Yeah, I mean, I think that's the biggest threat, right, Tom? Because right now with the Fed rates that have already happened, we're already at a Fed fund of 1.5 to 1.75, and they have already told us they really are looking for that to be at 3 or 3.2 by the end of the year. So we're only halfway there for what they want to get done this year. And you can see the dramatic impact it's already had on the housing market, on mortgage applications. It's going to have obviously a very detrimental effect on variable credit rate card payments for people. Auto loans are going up. So the inflation that Powell was so adamant yesterday in front of Congress to get under control and back to 2%. He said that the world needs that for price stability. They are so focused on this inflation and he admitted to Congress, he said, it could cause a recession. It absolutely could cause a recession. Yet it is so important that we get to price stability. So they are so focused on inflation at the potential risk of recession. But, Tom, let's be honest, a lot of the Fed stimulus contributed to our last 12 to 14-year run, and now we're just paying the piper. So we have to pay the piper. There is no free lunch. There is no free stimulus in this world. It will come at a cost eventually, and that's where we are right now. We're learning the cost of it.
Yeah, I like that angle there, Rebecca, because if you look at what they did, the accommodation lasted too long. The interest rate hikes did not come soon enough. So they made policy mistakes already, in my opinion. Are they making another one here where they're going to actually continue to push rates higher, even though we're going to start seeing that slowdown in the economy continue?
Yeah, well, I mean, I think that was what we were looking for from Powell yesterday when he testified, and I think that the answer was pretty clear. In other words, I was looking to see if he was going to say, we will pause our campaign here if it is starting to really lead to recessionary trends in the overall broader market. Basically, we're asking, what if Wall Street collapses and Main Street starts to think this is a problem? What are you going to do? And again, the point was very adamantly clear. Even at the stake of a recession, they are going to get inflation under control with the methods and the means that they have. And if you look at Bank of America's weekly outflows, you'll see 16.8 billion exited equities this week. That's the fastest in 2 months. So I think even with the week and even with up to the positive side, I think real investors understand that we are in for some troubled waters ahead. You cannot raise rates this fast on as much money that's been printed globally. The United States, 10 trillion roughly in the last 24 months. The rest of the world, 20 trillion. That's $30 trillion. And if you're raising rates this fast, we've got big problems ahead in the bond markets.
Yeah, and I think investors starting to raise a little bit more cash also, maybe preparing for that final whoosh to the downside here. But if you're looking for any sectors or any bright spots during this tough and volatile environment for investors or traders, Rebecca, what areas are you looking at or focused on at this point?
Right now, I think with Russia and Ukraine and all of the upset that really created in the global energy markets, I would say energy is going to be a sector to the upside. Obviously, we have massive problems here in the U.S. with gas prices. So energy is a sector I think is still going to perform for us for the short term. But other than that, Tom, I'm really looking more at commodities to get us through this market change that we're going to go through these next couple of months.
So you think this pullback here in crude oil and a lot of the crude oil and energy names creating some opportunities for investors, if not only for maybe a pullback in the overall market, but for a sector that's been beaten up and there's still a lot of uncertainty out there?
Yeah, a lot of uncertainty, on around the supply side. The supply side is really where we can get some price increases. So I like that. I don't like that this administration is so pro-green that they make the price at the pump $5 for all the rest of us. But, I think someone actually asked the secretary it's the spokesperson yesterday at the White House. So is the option that we're saying $5 gallon gasoline or $61,000 EV car, is that the option that this administration is promulgating? But I do think that we do still have a lot of energy shocks coming this year. And I think that if you time it right, you could actually do well in that sector.
Well, according to them, it's Putin's inflation and nobody else's. That question still lingers over my head. And I got to disagree with that one. All right, Rebecca.
I do too.
Yeah, great.
Thanks, Tom.
Yeah, great stuff as always. That's Rebecca Walser, president at Walser Wealth Management, helping us.